Welcome back to the Investing, Money and Markets podcast. And this week we're talking about megatrends, something that some people may not be familiar with, or indeed how to invest in a megatrend. But to talk us through this, we're joined by Pierre Debru, who's head of research at WisdomTree. Thank you very much indeed for coming on the program today.
Thank you for having me.
Megatrends, some people will know what they are, but a lot of people, this may be the first time they're really hearing about them. Can you just explain a little bit about what a megatrend is from an investment perspective, and maybe give us a few examples that we've seen recently?
Yeah, of course. So megatrends, sometimes we use that word, sometimes we say themes, right? It's basically those big macro tendencies we can see that are impacting the world as we know it, right? And so the idea is that there are structural changes to the world. And so from an investment point of view, they are creating structural growth opportunities and therefore investment opportunities. So if we think about what they could be the internet, for example, right? If you go back to the early 2000s, the creation of the internet or the creation of internet-based company would be one theme. If we look today, you could talk about artificial intelligence. You could talk about Europe defense. You could talk about aging population. These type of things are what we call megatrends. But just to be very clear, this is not something that's only recent, right? You could think about the phone. You could think about television. They would have been megatrends or themes like 50 years, 100 years ago.
And one I like to use as an example is the railway.
The railway
is a historic megatrend that really transformed the world, or steam power. I guess a lot of them are driven by technology, but as you say, they're not all technology driven, because aging population is a good example of one we're seeing now that's not a tech.
Yeah, so railway is a great example. But like you said, we tend to think about megatrends as tech, but they're not all tech. In our view, the way we classify them, if you want, is we have four big families, right? One is what we call technological shifts. So yes, it's tech, but then we also have geopolitical shifts. So Europe defense, reshoring would be in that family. We have demographic and social shifts. So aging population fits obviously in that one. And then what we call environmental pressure, which is more what people tend to call green theme, right? You would have electric vehicle, you would have clean energy, you would have batteries in that family.
And from an investment perspective, presumably there's an opportunity that exists when there is a major structural shift. I mean, I can remember working as a journalist back in the late 90s, and you could tell the internet was going to change everything. And obviously there was a huge rush of money into .com stocks that then really inflated that market. But there is an opportunity for investors if they can anticipate these shifts as they're happening.
Yeah, so clearly those themes or those megatrends, right, they're transformative, right? They're going to have an impact in our day-to-day, they're going to have an impact in the world. And the result of that from an investment point of view is that they're creating growth, structural growth, right? And that's obviously something that you look for when you're an investor. You're looking for those structural growth opportunities to really go in, right? Then we can discuss how do you invest, right? You mentioned .com companies. Was that the right way to invest in the internet theme? That's something we can discuss in more details. But if you go back to the key point of investing in thematic investment is looking for that structural growth. Now, it's easy to say, it's a little bit harder to do, and there is a lot of fine points you have to think about when you're investing in thematics, but that's really what you're trying to achieve. You're trying to achieve this structural growth, and you're trying to achieve an investment early, like you said, into companies that are going to really ride those transformation, right? And so if you think about the internet, clearly you're thinking about Google, you're thinking about Amazon, right? And so how do you get into those companies early is a key question for thematic investment.
And also, I mean, using the .com example again, getting the right companies, because obviously in the late 90s, there were a lot of companies that are no longer with us that we thought at the time, wow, these are going to be the giants of tomorrow, when some of them were not at the end of the day.
Yeah, so that's a very good point. And there you have to take a quick step back and think about the market structure in some way, right? What you have to really have in mind is that equity is a winner-take-all game, right? In the sense that there is really this tendency for the winner to win big and for the losers to go away, right? And like you said, if you're thinking about the internet and you go back to the 90s, late 90s, let's say, right? And you say, okay, which were the 10 biggest internet companies in the world at that point? Out of the top 10, 3 are with us today, right? Booking.com, eBay, Amazon. That's it, right? Then you have Lycos, you have Yahoo, all of them are gone. Or, I mean, Yahoo, you could discuss the brand still exists, but the company not really. And so that's a fact, right? You're going to have a lot of companies that try to write the theme, that try to really get into that theme and benefit from the structural change, but only a handful, if not that, will win, right? But now, from an investment point of view, what does that mean, right? Does that mean that you need to be extremely selective and try to get into those winners early? Or are you saying, no, it's more than you need to cast a wide net to try to get both the winners and the losers, right? And here, history is very clear. The potential of exponential growth in the winner is a lot bigger than the potential loss on, in brackets, the losers, right? If you invest in Amazon early, you're not looking at 100% of gain. You're looking at 1,000, 10,000 of percent of gain over the very long term, right? And here I just want to be very clear. Thematic investment is a long-term game. You're entering into themes that are years, decades in the making, right? But if you play that long game, Amazon would be thousands of percent of return. A company like Yahoo, by construction, you cannot lose more than 100%, right? Like the downside is capped. The upside is uncapped, right? And so if you think from an investment point of view, what does that mean? That means it's a lot more important to get the winner than to avoid the losers, right? And so if you're saying, I'm going to be extremely selective because I know only a few will win, and I'm going to try to guess early who will win, the risk you're taking is to miss the winner, is to miss the uncapped exponential growth, and maybe put all your money in Yahoo, and you got the theme right, but you got the execution wrong, the implementation wrong, right? However, if you were to say, I'm going to invest in all of the top 10 biggest companies in the internet in the 90s, right? Yes, you would have had 7 losers, but the 3 winners have made so much gain that you would still have beaten the market, right? And so that's the first point that I was mentioning. The implementation of thematic investing is very important because you can get the theme right, you can get the implementation wrong. And so one of the first principles in our view at WisdomTree when it comes to thematic investing is you need to be sure that you get the winner in the basket. And if it is at the cost of having a few of the losers, it's not that big a deal if you get the winner in.
And how do you decide when something's starting to look like a megatrend? And how do you decide which companies are going to be in that basket?
So that's an interesting question. In some way, if you think about investing, right, figuring out which company is going to do well or not do well is very hard, right? And there's a lot of discussion around do active manager outperform or things like that because picking stocks is extremely difficult, right? When it comes to theme, you can see very quickly in your own experience that it's a lot easier to see what's going to be transformative. You said before, very early in the 90s, you could see the internet would be transformative, right? You could not say, I knew Amazon would be the winner, right? Mm-hmm. But you could say the internet, that's a big deal, right? Today, AI, you know it's a big deal. Is it going to be an open AI play? Is it going to be an Anthropic play? A lot harder to say. But AI is a big play. Like it's not as difficult a call to make, right? So figuring out what is a theme, what is not a theme is not that difficult. But what's really difficult is implementation, is what are the stocks that you want to put in a basket. That's really hard, right? And like I said, there is like some fundamental principle that you need to apply to try to get those baskets right. So at WisdomTree, when we think about a thematic basket, we really think about 5 pillars of that we use to really figure out how do you build a portfolio, right? The first one is what we call alignment to the theme, which is every theme is different, and therefore every portfolio is different. There is no cookie counting approach where you say, this is my rule, I apply all my rules to every theme, right? No, you have to really stay close to the theme and understand what is this theme doing, where and how is it transformative, and therefore where are the companies that may benefit from this transformation, right? One argument you could make, for example, is you think about the internet. Again, do you want to be in the software or do you want to be in the hardware, right? Do you want to be in Amazon? Do you want to be in Cisco? That's a key question. And so that's what we call being aligned to the theme. And that means every single strategy you could think about for each theme is going to be completely different. The second thing, the second pillar that we use is expertise, is you need to understand the theme, right? If it is a tech theme, you need to understand the tech. If it's a geopolitical theme, you need to understand the geopolitics. And so what we do at WisdomTree is we build a lot of internal research. We really invested in the research, but also very often we bring in external research. We create a partnership with an expert on the ground, right? Someone who is not a financial expert, but who is a tech expert of that specific technology, for example. So the expertise is very important because you need to understand what is the theme doing, what is the tech doing to really figure out how to align the portfolio to the theme. Then what we call purity, which is it's about being investing in the theme. It's not about being invested around the theme. It's about being invested in the theme with a pure exposure to the theme, with a really strong alignment to the theme, being revenue, being very aligned to the theme, right, at the end of the day. So that's purity. And then two others pillars that are very important and that people tend to overlook. First is differentiation, which is if I want to invest in AI and I build a portfolio which looks like the NASDAQ, is it really an AI play or is it a tech play, right? And so when you think about alignment to the theme, when you think about expertise, when you think about purity, it really gives you a way to create a differentiated portfolio that is not going to be the NASDAQ, that is not going to be the MSCI World. And finally, the last really important pillar is what we call discipline, which is once you figure out how do you want to invest in the theme, this is a long-term play. You want to be disciplined in the way you apply those rules or those mechanics, right? To stay invested in the relevant stocks over the long term, even if we know in thematics you're going to have some good periods, some less good period, right? It's going to come and go, ebb and flows. And so you need to keep that discipline in to really benefit over the long term, right? So that's the 5 pillars we use. And really the key for us is to get this implementation right, to really get the investment in the theme right.
And how can investors distinguish between this kind of structural formation that we're talking about here and what is more just cyclical hype? I mean, obviously you take something like AI, there's a lot of hype about it right now, and there's a lot of talk as we speak about that the AI trade is correcting and so forth, but it's still a mega trend at the same time. So how as an investor does one distinguish between those?
So I think one of the key thing is first, what is the investment case and how does the theme translate into the investment case, and therefore does that stand to scrutiny, right? And clearly I think you can see how looking at AI, for example, you're going to see how this is a structurally changing opportunity, right? Maybe if you think about metaverse, a few years back, that was less the case, right? And then there is also a question around, is it an investable theme, right? Is there any companies, really? Because if there is no company, then it tells you something about the theme, right? Similar to Metaverse again. If you were to say, how do I build a portfolio around Metaverse? There isn't really any company, right? So it tells you something about the theme as well. So that's two things that you want to look at. Third thing you want to look at, obviously, is flows and where is the money going, right? That also tells you something about the theme. But at the end of the day, it's about structural growth. So it's about how is it, what's the impact on the world and what's the expectation they can have on that.
And can you incorporate some sort of short-term factors into a multi-thematic megatrend capturing strategy?
Yeah, so multi-thematic is, again, in some way a form of complexity on top for the manager, but it's a form of simplicity for the investor, right? If we're thinking about thematic investing, you could argue there is quite a few themes. And so how do you build a portfolio with those different themes? And so what we are seeing on the investment in the investor side is that they would like to delegate some of that complexity to a manager. And so there is a lot of interest in those multi-thematic strategies. Now, from the manager point of view, it's kind of a level of complexity on top, right? Now, the way we think about multi-thematic is that first, there is a lot of advantage in having a multi-thematic strategy. But the key advantage is that there is a lot of diversification between the theme, right? If you're thinking about a portfolio construction in equities, right? People know that there is diversification by having multiple countries, by having multiple sectors, right? Sectors, they are equities, but they don't behave the same. And so if you have multiple sectors, you can create some diversification, and that's going to improve your risk-return profile. There is a lot of diversification between themes, right? Because themes, they may be in different countries, they may be in different sectors, right? An AI basket is going to be more tech. A Europe defense theme is going to be more in the industrial materials, right? And so obviously there is already that level of diversification, which is sector or country driven. But then on top of that, there is a diversification which is due to the specific adoption curve of the different theme. A theme may be more advanced in the adoption curve. A theme may be very early, and that also create diversification because they may not move, or they may react to different news, right? AI will react to AI news. Europe defense will react to European defense news, geopolitical news, right? And so you have a lot of diversification. So putting the theme together for a long-term investment is really interesting because you really benefit from the ebb and flows of the different themes, and they counterbalance each other a little bit. So you have an investment which is a little bit more stable. But in terms of building the portfolio, then it creates questions, right? The first thing is that you want to only invest in themes that have legs, right? So we were discussing about real structural growth opportunities. But then, and so that's what I would call a strategic allocation to themes. So you want to pick themes basically and make sure that they have a long-term prospect and that they are diversified between each other. So having themes in the 4 families I was talking about earlier is interesting. But then you also have to acknowledge that there is ebb and flows in themes, right? And those ebb and flows are very sentiment driven. There is period where sentiment is very positive, some period where sentiment is less positive. So how do you play this into a portfolio? We think there is a space for what we would call a tactical overlay, where you would say, okay, I'm believing in those 10 themes, so I'm going to stay invested in those 10 themes over the long term, but at a given point in time, I'm going to follow sentiment signal and say, this one, the sentiment is very strong, I'll overweight. This one, sentiment is a little bit more weak, I'll underweight, right? And that's something you can do over time to really have your strategic long-term investment in the themes that have high conviction, high diversification, and then have a tactical overlay where you are really investing in the sentiment and the ebb and flows of the sentiment to overweight the themes that are currently having a lot of tailwind and underweighting the one with headwinds.
And we've talked about AI, we've talked about growth in the European defence sector.
Mm.
Are there any other big themes that you're seeing now that can contribute to these sorts of megatrends now?
Yeah, so if we think about 2026, 2027, right now we are seeing three big trend, I want to say. I mean, I don't like the word because it sounds like themes, but three big ideas, let's call them. One is this geopolitical fragmentation we are seeing, right? We are seeing like the kind of geopolitical order post-World War II is fragmenting, right? And that creates strong change, right? And one of the clear change we are seeing in Europe, and which clearly touch us, right, is this need to reinvest in the defense of Europe because the US is probably taking a step back. Like the US protective umbrella in some way is maybe a bit less secure than it was before. And so Europe needs to reinvest. And so we saw a lot of interest in Europe defense, right? And if you just look at flows in Europe, in European domiciled fund and ETF in January, Europe defense is one of the key source of inflows, right? But that's only one of the potential theme you could think about under this geopolitical fragmentation. Because in the same way that we're investing in Europe defense, right? If you look at the NATO summit last June, there was a commitment to go from 2% of GDP spending in defense to 5%. But under the hood, it's not exactly 5% in defense, it's 3.5% in defense, 1.5% in infrastructure, right? Infrastructure that can be used in defense, but the definition is quite loose. So road, rails, bridge, all of this counts, right? So what we think is that there is the Europe defense theme, there is a Europe infrastructure theme as well, which is kind of sister themes, right? If you think about this umbrella of the US disappearing, and you think about how France or Germany or the UK is reacting, I mean, it's quite clear that Japan, South Korea, they're reacting the same. So there is also a bit of an Asian defense theme that's going on. So under this geopolitical umbrella, you have all of this. So that's one big group. Second big group is what we call energy addition, is this idea that demand of energy around the world is growing extremely fast, right? Because you have an increase in population, which obviously means more energy demand. You have a growth of middle class in emerging market, and as people get richer, they can buy more consumer discretionary, and that creates more energy demand. And on top of that, which are very structural demand shifts, right? You have AI, which is also extremely demanding in energy. And so if you put all of this together, you realize you have a huge increase in energy demand. And so you have to ask yourself, where is this marginal demand in energy going to be, how is it going to be met, right? And that's where you're going to see nuclear energy, clean energy, so solar, wind come in, right? And battery as well. So you have all of this complex of what we would historically call kind of green themes, right? That are really getting strong tailwind from this energy demand and this energy addition theme, right? The word we use in the investment community is energy addition. So that's a second big idea. And the third big idea is AI. But we had 3 or 4 years of AI being a semiconductor play, a kind of infrastructure play, which is still the case, right? But what are the maybe secondary theme? How is AI going to evolve from an investment point of view? And the big story this year is what we call physical AI, which is how AI is going to impact the real world, right? And of course, we all seen those videos of humanoid robots dancing, fighting, whatever. That's a bit down the line, right? But today, what we may not link to AI, but we should link to AI are drones, both military or civilians drones, automated mobility. We're talking about automated taxi being rolled out commercially in 30 cities in the US this year. So Tesla, Waymo, right? And then a second wave of industrial automation. So factories being automated even further, but using kind of second generation robots which are AI driven. So this physical AI, this impact of AI in the real world, that's what a lot of tech companies are talking about this year. And so that could be this kind of extension of AI. And we're seeing this in flows, right? I was saying Europe Defense is seeing a lot of flows in January. But if you look at the top 5, 6 themes that are seeing flows in January, you have defense, you have robotics and automation, you have nuclear, so very much linked to these themes. And the kind of theme that I haven't mentioned, but that is underpinning everything else, is metals. Right?
Metals.
Yeah. If you think about both energy addition, so clean energy, if you think about defense, if you think about physical AI, all of this, what they need is a lot of copper, a lot of silver, a lot of platinum, a lot of nickel, a lot of lithium, a lot of cobalt, and the supply is not there. So there is a lot of unbalance, supply deficit unbalance, and so that's also something we're seeing a lot of flows in, all those strategic metal miners or strategic metals themselves.
And with all this going on, do you think that the market is underestimating the disruption risk that a lot of this brings with it?
So that's an interesting one, because I think in some places market is underestimating the disruption, and in some part of the market it may be overestimating the disruption, right? Yeah. It's very hard to get the disruption right in some way, right? You could argue, if you look at the dot-com bubble, that maybe in the bubble it's an overestimation, then the bubble crashes, right? And then at that point it's complete underestimation. And in fact, both moves are wrong, right? Like none of the two moves get the disruption right. Right now, I think where we're seeing very strong move, and you could argue maybe they're overestimated, is in the software world, right? The big stories is Anthropic and how Claude could destroy every single company in the software world. That's probably overplayed, right? Of course, it's going to be disruptive. Of course, software companies that do not have strong moat will probably be challenged, extremely strongly challenged, right? But there is also software companies that have very strong moat, like if you have proprietary data, if you have proprietary workflows, these type of things, that creates moats. If you think about like companies, they do not like to change their processes too much, right? Like there's a lot of risk of getting an operational process wrong. So it's not like they're going to change all their software tomorrow. So that could be a bit of an overreaction. Where we're thinking there is a bit of underreaction maybe, it's in the clean energy space. The reason why is there was a lot of narratives around clean energy is about climate change, right? And obviously we know the Trump administration position on climate change. And so there has been a lot of investors thinking, okay, if climate change is not happening, then clean energy is not happening, right? We think that's an underreaction in many ways. Clean energy are going to be necessary just because of this marginal increase of energy demand that we're going to have, which is big. It's marginal in the sense that it's on top, but it's a very big one. And clean energy are going to have a key role in matching or responding to that demand, right? So in the clean energy, we've seen pretty bad performance in the last 3 years, and in the last 12 months, we started to see quite a lot of those stocks coming back. But I'm not entirely sure that the market is completely seeing the full picture of how the energy addition concept, if you want, is really going to drive a lot of growth in the deployment of clean energies.
And what do you think is the biggest risk that investors face when they're allocating to these kinds of megatrends?
Yeah, so the key risk, right, is you get the theme right and the implementation is wrong, right? And so in thematic, right, the big risk as an investor is to just care about the label, right? You're thinking, oh, this fund or that fund is called AI, it's probably AI. The reality is that all of those funds, even if they have very similar names, under the bonnet, they may be very different because there is no benchmark, right? If I tell you what is the benchmark for solar or what is the benchmark for artificial intelligence, you don't have one that comes to mind. You can't say, oh, it's the Nasdaq or it's the S&P 500, right? And because there is no benchmark, clearly allocated benchmark, right? Those funds are very different. And so you may end up with funds that are both called AI, but in fact, under the bonnet, they're completely different. And so the implementation is key, right? And I told you how we think about this implementation in WisdomTree, but for investors, it's very important to understand what the fund invests in and if that investment aligns with their view of what the theme is going to do, right? And so if you think about that, what's inside my fund idea and what is the big risk, one of the big risks is that in fact you're not getting a theme aligned fund, but you're getting another tech fund, right? So very high overlap to the Nasdaq would not translate your investment view into an implementation that gives you that potential return if you're right about the theme. Because if you are investing in a fund and it's just the Nasdaq, then you could have just bought the Nasdaq, right? Or you could have a kind of the opposite risk, which is you have a manager which is overly selective in the stocks, really tries to only pick the winner and then miss the winner, right? That's also a big risk, as I said, because it's a winner takes all game, equities, and so it's very important to get the winners in. So really understanding the thematic philosophy of the manager to make sure that the logic of the portfolio construction is really aligned to the theme and is really understanding how thematic works and how it is possible to create a portfolio that is going to really be aligned to that structural growth.
And from your perspective as well, when you're let's say creating a product, that also applies to the companies, because some companies might look like, oh, this is a good AI play, but if you look under the bonnet of the company, actually how much revenue are you guys making from AI? You might have a division that's working on it, but that doesn't necessarily make you an AI company, for example.
Yeah, no, that's for sure. And that's why those 5 pillars I was talking about before are really key when it comes to building the underlying basket. Like, it's about first figuring out, okay, we are saying artificial intelligence, right? What does that mean? What's the value chain looks like? What part of the value chain do I really want in my portfolio? These type of things. But then having this expertise. So as I said, sometimes we do partner with external companies which are on the ground. So not financial companies, but like consultant or companies that are working in the theme in the technology itself as a way to build our indices, right? And really get their view, because they will have on the ground view of what the companies are doing, as you're saying, on the ground views of what the technology and how it is evolving. And then, again, the pillar is about purity. And so that comes back to your point. Does the company dabble in the theme, or is it really a key thought leader in the theme? Is it really doing unique thing in the theme? And that you can't guess, right? Like it's only about looking at the company, doing the research, talking to people on the ground that you can figure this out. And that's how we build our indices, really based on those 5 pillars. Because at the end of the day, when you invest in thematics, what an investor is really looking for is this pure play, very aligned portfolio, differentiated to what he may already own in his portfolio, which is usually a MSCI World, Nasdaq, and so with low overlap, right? And to do that, you need to have really strong expertise, strong alignment, strong purity in the portfolio.
And just to finish off with, I just wanted to ask you about indicators that you use as a house to see whether a potential structural trend is accelerating or whether it's stalling. I mean, do you have any tools that you use for that?
So in some ways, the first tool for us is sentiment. Like thematic, to us, when you invest in thematic, there is 2 levels. There is like the long-term conviction. Is it something that is really going to transform the world? Is there this really strong conviction? But once you have that, you're going to have ebb and flows, and there is like a more formal ways to say this, but there is what people call the Gardner hype cycle, which is like you're going to have some period of overexcitement and some people on, and some period of under-excitement, if you want. And so we were talking about this, like how people can expect over disruption or under disruption. So that's how it translates into this hype cycle. And so once you have this conviction, you have to take into account the fact that there is going to be those hype cycle in your investment, and they are very much sentiment driven. They're not as much, for example, fundamental driven, right? It's very much more about the narrative and how people feel and anticipate the theme more than reality on the ground. The reality on the ground usually is something that's a little bit more linear, right? If I take the example of solar, for example, you don't create a solar farm overnight. It takes years of planning, months of construction, right? So on the ground, if you look at the last 5 to 10 years, the solar farm building is quite steady. It's accelerating, right? But you don't get like up and down, really. It's quite a stable growth, right? Or an accelerating growth. But the sentiment is where it changed, right? Is like, because the sentiment is based on anticipation, is based on what do I think it will disrupt, what do I think it will happen next time. And so sentiment is very important. And so for us, when it comes to investing in thematics, you want to have this conviction, but then you have to be very, you have to respond to this sentiment. And so we use sentiment indicator to overweight or to underweight theme in our multi-thematic strategies to really try to take into account those sentiment movement in the investment.
Understood. And just as a sort of indicator, how often does that require tweaking? Because obviously we're talking about long-term strategies.
Yeah, so if we go back to our multi-thematic strategy, right, which is a good way to look at multi-thematic, we have 2 cycles in some way. The theme selection or the strategic asset allocation, right? It's once a year.
Okay.
So like themes, you don't really need to think about them every 5 minutes, like they're long-term play. So every year you can have a review a little bit and say, okay, is there a new theme that has emerged that we need to add? Has the theme played out, right? Maybe. So that's the long cycle. And then there is a sentiment cycle, which is like, okay, is this theme that we believe in a more virtuous cycle or a vicious cycle in some way, right? And that we do more quarterly because that's moving a little bit faster. But still, it's relatively slow in our view. Like we're not going to do this every day, right? So it's more a yearly cycle, quarterly cycle.
Understood. And I guess the rule of thumb is this is a long-term investment.
Always.
This is not for week by week.
No, exactly. It's a long-term investment, and so you need to have this long-term conviction, and then tactical way to play the theme a little bit more fast, but still quarterly is enough.
Brilliant. Well, thank you very much indeed for coming on the show today and telling us a little bit more about multi-thematic and investing in these long-term trends.
Thank you very much.
The content of this podcast is for information and entertainment purposes only and does not constitute financial advice. The views and opinions expressed by guests or hosts are their own and do not necessarily reflect those of the armchair trader. Investments can go up and down in value, and you may not get back the amount you originally invested. Past performance is not a reliable indicator of future results. We do not provide any personal investment, tax, or legal advice. Always do your own research or seek independent professional advice before making any financial decisions. The Armchair Trader is a media company and is not authorized or regulated by the Financial Conduct Authority.